Hello, and welcome back to the channel. I'm Algabot, and today we're taking a close look at a pure price action trading strategy for MetaTrader 5 called Three Drive Exhaustion. This expert advisor uses no indicators at all, no moving averages, no oscillators, no volume. Instead, it reads raw price structure to spot the classic three drives pattern, where a trend pushes to a third, exhausted extreme before it reverses. By the end of this video, you'll understand exactly how the strategy finds these turning points, how it confirms them before committing, and how it manages risk on every trade. So let's dive in. So what exactly does Three Drive Exhaustion do? At its heart, this is a counter-trend reversal strategy. It waits for a trend to overextend itself, and then it positions for the snapback. What makes it unusual is that it relies on nothing but price itself. There are no indicators driving the decisions. Every signal comes from the open, high, low, and close of each candle, from swing pivot points, and from horizontal price levels. The pattern it hunts for is one many traders know well: three drives, or three pushes, to a top or a bottom. When a market is trending up, it often prints three successively higher swing highs. The strategy measures the momentum behind each of those pushes. If the third push gains noticeably less ground than the second, that's a sign the move is running out of fuel. The crowd that chased the trend is now trapped, and a reversal becomes more likely. But the strategy does not blindly fade the move, and that's a crucial point. Instead of guessing where the top is, it waits for the market to confirm the turn by breaking structure, by closing through the last protected swing level that sits between the drives. Only then does it commit to a trade. This expert advisor runs on a single time frame, whichever one you attach it to, so you have full control over its time horizon. It's designed for clean, trending instruments. Think gold, or major currency pairs like the euro against the dollar, typically on the 30-minute or 1-hour charts. So who is it suited for? It's really aimed at traders who are curious about price action and market structure trading, and who want to study how an exhaustion reversal can be defined in strict, mechanical rules. Remember, this is for educational purposes only. We're studying how the logic works. We're not making any promise about results. Let's break down the mechanics step by step, using the short setup as our example. The long setup is simply the mirror image. First, the strategy scans recent price history and marks every confirmed swing high. A swing high is a candle whose high stands above a set number of candles on each side, controlled by the pivot left-right parameter. From those pivots, it takes the last three swing highs in order. Condition 1. Those three highs must be ascending. The first is lower than the second, and the second is lower than the third. That's our three drives up. Condition 2. Momentum must be decelerating. The strategy compares how much ground the second drive added against the first. If the climb from drive 2 to drive 3 is smaller than the deceleration factor times the climb from drive 1 to drive 2, the push is fading. That is the exhaustion signal. Condition 3. The trend context must agree. The higher lows between the drives should themselves be ascending, confirming a genuine uptrend rather than random chop. Condition 4. The third drive must still be the high. No later candle is allowed to have exceeded it. If price has already pushed past the third drive, the setup is invalid. Condition 5 is the trigger. The strategy identifies the protected swing low sitting between drive 2 and drive 3. When the most recently closed candle closes below that protected low, structure has broken to the downside. That break of structure is the confirmation, and the strategy signals a sell. It also checks that this happens within the max weight bars window, so the setup is still fresh and not stale. Now for risk management, which is fully structural. The stop loss is placed just beyond the third drive high, with a buffer expressed as a fraction of the drive's height. Because the buffer scales with the size of the move, it adapts automatically to any symbol or time frame. No point values or volatility readings needed. The take profit is then set as a fixed reward-to-risk multiple of that stop distance. With the default reward ratio of 2, the target sits twice as far from entry as the stop does. The strategy holds just one position at a time per magic number, and from there the broker's stop loss and take profit manage the trade to completion. Let's look at the actual code that runs inside MetaTrader 5. At the top you can see the input parameters. These are the dials you can adjust in the strategy tester. Pivot left-right sets how many candles must sit on each side of a swing pivot. A larger number means stricter, more significant pivots. DecelFactor controls the deceleration filter. Lower it, and you demand a more pronounced loss of momentum before a signal. Stop buffer fraction widens or tightens the structural stop as a fraction of the drive's height. Reward ratio sets how far the take profit sits relative to the stop. Max weight bars limits how long after the third drive the break is allowed to occur. And finally, there's the lot size and the magic number that tags the strategy's own trades. Now the signal logic. The code reads the highs of the last 3 swing pivots into HA, HB, and HC. The first check confirms they ascend, 3 drives up. Next, it measures gain AB and gain BC, and only continues if gain BC is smaller than the DecelFactor times gain AB. That's the exhaustion test. It then grabs the protected swing low level. It checks the signal bar is still fresh within max weight bars, and crucially, that the latest close prints below that protected low. That is the break of structure. Once confirmed, it computes the drive height, takes the current bid as the entry, places the stop just above the third drive high, measures the risk, and sets the take profit at the reward ratio times that risk below entry. Finally, it sends a sell order. The long side is the exact mirror of everything you see here. Let's walk through this illustration to see the strategy in action on both sides of the market. On the left, watch price fall in 3 distinct drives down. The first drive bottoms out, price bounces, then a second, lower drive prints, followed by another bounce and a third, shallower drive. Notice that the third drop is smaller than the one before it. That's the deceleration the strategy is looking for, the sign that sellers are becoming exhausted. The green dashed line marks the protected swing high between the last 2 drives. When a candle finally closes back above that protected level, structure breaks to the upside, and the buy entry triggers. From there, price climbs toward the take profit, and the long trade is complete. The structural stop, by the way, would have rested just below that third drive's low. Now watch the right side of the chart for the mirror image. Price pushes up in 3 drives. Each swing high a little higher than the last, but the third push barely adds any ground. That fading momentum is the exhaustion of the up move. The red dashed line marks the protected swing low between the second and third drives. As soon as a candle closes beneath that level, structure has broken to the downside, and the sell entry fires. Price then rolls over and falls to the take profit target, completing the short trade, with its protective stop sitting just above the third drive high. In both cases, notice that the strategy never tried to pick the exact top or bottom. It waited patiently for the 3 drive exhaustion, and then for price itself to confirm the reversal by breaking structure. That confirmation-first approach is the whole idea. This is an educational illustration only. And that brings us to the end of our deep dive into the 3 drive exhaustion strategy for MetaTrader 5. We covered how it spots 3 exhausted drives in pure price action, how it waits for a break of structure to confirm the reversal, and how its structural stop-loss and reward-to-risk take-profit manage every trade. Remember, everything in this video is for educational purposes only and is not financial advice. Always test any strategy thoroughly on your own before risking real capital. If you found this breakdown helpful, please hit the like button, subscribe for more MetaTrader 5 strategy analyses, and drop a comment telling me which strategy you'd like me to cover next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.